Good morning, Business 330 students. This is Professor Hassey. It is Friday, October 28th, and this is our second video of our first week of online learning this fall 2 session for 2022. And I want to welcome you back and welcome you again to our course. Some of you have yet to visit our Blackboard site, so please, I encourage you in the next day or so to please fire up your class and begin the work. Some of you have already participated in giving us your student bio, which has been excellent. It's great to hear and see all the different type of backgrounds that our students are from and their experiences. And I encourage all the students to read your colleagues' bios. You can learn a lot about the students in our program. Secondly, today is Friday, October 28th, and at 1 p.m. today, our stock markets close for the week. And we have to be putting together our first week portfolio of the stocks that you have selected or will select and find their closing price in the market at the close of the market today, Friday, October 28th. At the same time, you'll find the indexes, the Dow, the S&P 500, and the NASDAQ. Indexes of market indicators, which also get their indexes and include those in your portfolio. And we talked about this a little bit on Monday, and I'll review that in just a minute. But this is an update video for our week, just to go over a review of the topics of the week. This is an introductory week. Even though we only have 8, we got to get up to speed, and your tasks are to get familiar with Blackboard, get familiar with our course infrastructure in Blackboard. Next week, I'll be meeting with you over the next week about individually for 5 or 10 minutes, and those calendar or that schedule is now posted in the discussion forum. We'll take a look at that in just a minute. So please pick a date and time when you would like to spend a few minutes with Professor Hassey individually, just to making sure you're comfortable with our course. Here's the Blackboard, and we for our course, Business 330. We went over this a little bit on Monday. Please get familiar with it this weekend. It tells you a lot about the course and what's going on. The report card is where you'll find your grade information, always up to date as you complete our assignments and assessments in this class. And we basically have four types of assessments in our class. We have the participation in class, the discussion forums, of which you're doing this week. We have assignments, 3 assignments during the course of the session to practice problems and make sure we understand the material. We have examinations, which are overall reviews of the material. And then we have a case paper at the end of the course to summarize the key part of corporate finance, and that's capital budget determination. So those are our assessments in this class, and they're all highlighted in the work in this Blackboard. A couple things to note. If you're new to the site and didn't see our video on Monday, if you go to the course syllabus and information section, there's our course schedules, our syllabuses, our important dates, all kinds of information about to help you get through this course and understand what's going on. I urge you to go and visit this page, course syllabus, schedule, and information. As I post information to Blackboard and complete our videos, I will post them to the Zoom and YouTube links file folder. This is our introduction video from this past Monday, and you can just click on that and watch it. It's also in our YouTube site. We have a YouTube playlist, and all the videos are there as well. If you have questions or concerns, here's the Zoom link to my office, my internet office, that you can talk to me and ask me any questions. There we have student hours every Thursday evening from 6 to 8 p.m. You have a discussion forum this week to give me a little description of yourself, your background, and put together a portfolio of $100,000. We talked about that on Monday. This work is due Sunday evening at midnight. Also, now in the discussion forum, you'll see a schedule of picking dates and times to meet with me individually to talk about the class, make sure you have any questions or concerns. And as you can see, these dates are the subsequent Mondays, October 31st and November 7th. what you want to do is you want to create a forum and say, hi, I'm student Y. I'd like to pick Monday, October 31st at 8 p.m. You just put that in the forum, and then I will put it on our schedule. And you click on this link at that time, and I'll be there, and we'll talk a little bit about our course and answer any concerns or questions you may have at this point. This is just a get to know session, but it is mandatory, and you will be given a grade for participating. You participate, you set up a scheduled date, you meet with me, you get 100. If you don't meet with me and blow it off, you get a 0. And it's 5% of your course grade. So again, this is a good way of building up your grade average by participating in digital online work with the professor. So take note of that this week, please. And finally, in the student discussion forums, you have student questions and comments where you can post questions to me if you have any concerns or specific concerns that I might be able to answer via that forum. Then we have a course, a digital textbook, which you can use and look at. We have library guides, which we'll talk more about during the course of our class, library guides to help you with research and getting information about a variety of topics. Computer's a little slow this morning. Let's be Then we have our weekly file folders of weekly information by week. This is our first week. These are the assignments and learning for this week. You click on the week 1 file folder. There's my introduction video. The video that I'm doing now will be also posted there. Our week agenda, which you saw at the beginning of this video, some class notes, a PowerPoint, and the introduction of our class and relevant material, definition of the S&P 500, PowerPoints and descriptions of our first 2 chapters of our course. So again, that's where we are, that's where we stand. And please get up to date with that, understand where everything is. If you have questions, immediate questions, post to the discussion forum. If you have immediate questions, send me a text, send me an email. If you can hold off, wait to our individual interview to ask me some questions and explanations about how our course is managed. As I mentioned earlier, here's the portfolio, that sample of the portfolio that I've provided for you in a PDF format, but the format that you are to give me is in spreadsheet format. Do a spreadsheet, Excel, Apple's Numbers, Google Sheets, whatever. But if you do use Apple Numbers, try to save it as a Excel file. If you don't know how to do that, don't worry about it. Just give me the numbers file. I will convert it to Excel. But no problems. But what you're going to be doing is you're selecting up 1 to 5 stocks. You make the choice, 1, 2, 3, 4, or 5, no more than 5 companies, and you're going to invest $100,000. So you take that 5 or 4 or 3 companies, you divvy up your investment in dollars, whole dollars, and then today, Friday, October 28th, when the market closes, you go to Yahoo Finance, you go to wherever, and find the closing price of that stock, put it into this cell, and then you take that price and divide it into your investment, and you get the number of shares of your purchasing. Round those shares to the nearest whole number. And also, I want to see in the cell your calculation, your formula to come up with that number, equals cell divided by cell. I want to see that. That's why I need a spreadsheet, so I can see your calculations and formulas in your cell. That's the only formula you really have to do, unless give me a sum of your numbers. Then I want you to find the Dow, S&P 500, and NASDAQ closing prices today. Put those in there so we can track your portfolio compared to the market averages over the course of our class. Again, you do not have to do this every week. We're only going to update our portfolio maybe 2 or 3 times during the course of our fall session. If you want to keep track of it on a weekly basis, go right ahead. But I do not need to see that. You'll update your portfolios when I ask you throughout our class. But you do have to give me your spreadsheet this week. So the first discussion post is based on 50% of your student bio and 50% of your portfolio. You get both right, you get 100. If you misstep on a couple of them, you'll have a chance to update and give me a fixer of your portfolio, but your grade will be determined on your initial work in posting your portfolio and bio. Many of you have a lot of knowledge about the current business world by looking at some of your bios. Many of us are already working in beginning our career, coming out of the military, starting a career, going to college, learning skills to begin a career, but all evolves around finance. Without capital, without cash, we cannot run our businesses. And that's why this study of corporate finance is so important. And also, it's a headache. As many of you know, money is a headache. It's a pain in the neck. And to learn how it works, how we use it properly, how corporations use it, can make life a lot easier. Corporate finance is important to management because the knowledge of capital budgeting, capital structure, and working capital provides for effective decision making if the corporation is to maximize profits and stay competitive for future success. In other words, the goal of finance is to maximize shareholder value, maximize the value of the company. How do you maximize the value of a company? You provide goods and services at a fair market price to earn a fair profit and cash flow. And then that cash flow is either redistributed back into the company or distributed to the investors of your business. Distributed to the investors in your business, there are two main types of investors in a company. People or individuals or institutions who lend you money, either short-term or long-term, and equity investors, private or public investors of stock in your company. It can be individual investors, it can be corporate investors, it can be hedge funds, it can be venture capital, that's private investing, all different sources of equity or corporate financing. Your job is to return those profits and return their investment back to them. If you do that successfully, your business is operating at full efficiency and full value. There are three main principles in finance. One is the investment principle. Kind of makes sense. You want to earn more money than what it cost you to get the investment. The cost of the investment is called the hurdle rate or the cost of capital. You want to earn, for example, let's say I go out and borrow $1 million and open up a factory and start a business. It costs me 8% to get a loan from a bank to get that $1 million. That means I need to generate a profit, a return off that $1 million plant over 8%. If I don't do that, I'm not making any money. And I'm not going to be maximizing the value of that investment. So the investment principle is very simply, earn more than what it cost you. The second principle of finance is the financing decision. Well, how much money should you borrow, or how much equity should you get in the business? Remember the balance sheet from our accounting days. The balance sheet tells us the assets or things that you own equal the liabilities and equity of the company. Your assets are provided by debt and equity. That mix of debt and equity funds the assets which create the revenues and generate the cash flow of your business. So how you determine the mix of that debt and equity is very important. A lot has to do with your credit rating. A lot has to do with your history of how you've run the company or business prior. A lot has to do with the management team and the people who represent your business in the market. I'm sure some of you have heard of this name, Elon Musk. Well, he has a specific type of business strategy. I have yet to figure that out, but in his mind, he does. But Elon Musk is a manager and a investor in many companies around the world. He just this week took over Twitter, one of the largest social media outlets in the world. And his first hour of operation of running Twitter, he fired the entire management team, bringing in his own people. Now, you usually do that in the real world over a period of time. Nice transition. His style, his way of doing things is immediately make an impact. The management of a company and its culture make a big difference in how it's represented in the markets. And then finally, the dividend decision. How do you distribute your profits and returns back to the investors? Well, it's pretty simple. In debt, you have to pay back the interest and the principal. No ifs, ands, or buts. But in equity, you can make a decision on whether you want to pay a dividend or not. Is it important to your investors to get some liquidity, a dividend? Or is it okay not to give them a dividend and reinvest those profits back into the business? A constant battle amongst corporate decision making. We have three main types of organizations in business: single owner, sole proprietor; a partnership, which is multiple owners; and a corporation, which is many, many owners, and the owners have no say in running the company as far as the day-to-day management. They hire a management team to do that. We're going to be concentrating on the corporation in our class, but it's also good to know the differences and advantages and disadvantages of each of the three types of organizations. As far as a corporation concerned, the reason why the corporation is perhaps the most powerful and wealthiest of these three is because they have what is called limited liability. Their liability is only assumed by the assets of the company, not in the ownership of the business, whereas is in the sole proprietorship and a partnership. Let me give you an example. Let's say I walk into a business, walk into the front door, and it's a sole proprietor or a partnership. It has owners, but the owners are exclusive, and the owners run the business. And let's say when I walk through that door, I trip over the doorstop, fall and hit my head and get injured. And the reason I fell is because the door had a place in it was easy to trip. So I sue the company to get reimbursed for my medical expenses and also get reimbursed for the time off from work that I lost due to my injury. Now, in a sole proprietorship, in a partnership, I can sue the business and as well as the owners, the individual owners, and sue their individual personal assets to get reimbursed. In a corporation, if that happened, I can only sue the assets of the corporation. I cannot sue the owners, who are the shareholders. They cannot be sued. That's called limited liability. Unlimited liability with sole proprietorships and partnerships, because I can take the personal finances, personal assets of the owners in a lawsuit. Thus, that's why so many companies want to be a corporation. The owners are protected. And that's why these days you see a lot of companies called limited liability corporations, LLCs, or limited liability partnerships. These are companies that are managed and run by just a few individuals, but they're treated as corporations because they have filed as a corporation and have to go about the usual ways of a corporation in the public world. They have to file letters of incorporation. They have to have a board of trustees and so board of directors and so on. But whenever you see a company with an LLC or an LLP, they're run like a sole proprietorship and a partnership, but they're treated as a corporation. That limited liability protects owners from lawsuits. You see a lot of doctor firms, a lot of medical practices, law firms, A lot of accounting firms are LLCs because the owners do not want to get sued. Interesting. Why do we grow? Why do we have capital? Why do we need money? Because we have to compete. We have competition. We have people who are producing similar products and services, and we have to compete with them. That's what capitalism is all about. In order to compete, we need capital. We have to go into the public markets and issue stock. We have to go to banks, bondholders, pension funds, insurance companies, and borrow money. It allows us to provide the resources to compete in the market. In addition to this, we have management objectives. This is my high-tech slide of the week. What is management's responsibility in a business? Well, management's responsibility in a business is to make sure they maximize shareholder profits. But also, does the manager have other responsibilities? Ethical decisions, social responsibilities. Are they ethically managed? Do they pay their employees and treat them properly? Do they not pollute the air and the water? Do they give back to their society, give back to their communities? This is another very important object or decision-making process of finance, is to make sure not only are you getting profits, but are you also a good citizen to the community? That's a key objective in finance. Some companies do this right. Some companies do this wrong. We talked about the cost of capital. The cost of capital is what it costs us to get the money to provide assets. We'll be spending quite a bit of time on looking at this. What is the cost of issuing stock? What is the cost of borrowing money? Well, the cost of borrowing money is simply as interest. But the cost of issuing stock is, do we meet the investor demand for what they expect to return from our company? And that's how the markets work. Remember, the stock market is supply and demand. Stock prices go up when there's more buyers of the stock than sellers. And why are there more buyers than sellers? Because they feel at that stock price, they can get their return or maximize return from that company. If the stock price goes down, there's more sellers than there are buyers. That means that the sellers are getting out because they feel that stock can no longer provide them an adequate return. That's the financial markets in a nutshell. But another key area of finance is making sure we know where we're doing business, who are our competitors, who are our partners, who are our customers, where are they in the world, what are government, political, social events influencing our business. Thing you see a lot of in the news these days is the value of the dollar and the comparison of dollar around the country. If many of you have lived and worked outside of the United States, you know what the dollar represents in those countries. The exchange rate is a big determinant of financial policy. The types of markets we work in, the New York Stock Exchange, the NASDAQ, the digital markets. When a company issues stock for the first time, it's called an IPO, an initial public offering. That's the primary market. But once it goes into the stock market and is being traded, it's called a secondary market. And that's the market you're doing today, setting up your portfolio. You're buying your stock in the secondary market. It's already been issued for the first time and the company's already received their money. Now the secondary market is transferring the wealth of the company back and forth to the individuals who own that stock. The location of these markets are pretty evident. New York City, Chicago Board of Trade, Tokyo, all around the world, stocks are traded. One of the things I urge all of you, if you ever can someday, especially since you're a business student, is to, if you're in New York and the East Coast, visit the New York Stock Exchange. It's quite an experience. It's quite different than what you think it looks like. It's very small, but it's a great place to visit, especially if you're in and you know business. Wonderful experience. The American $100 bill, the Franklin. Companies strive to attract them at the cheapest possible price and make the greatest return. And a way of doing that is these key indicators in the market. These key indicators tell us how the markets and how our business is competing for these capital in the marketplace. You should be familiar with some of these. We're not going to be studying them directly, but the top three they're part of our portfolio. The Dow Jones Industrial Index, the Standard & Poor's 500 Index, and the NASDAQ Index. Those are the three major equity indicators of the United States economy. Look how they have changed this year. It has not been a very good year for the stock markets. The fourth number there is the 10-year United States Treasury yield. If I lend the United States government today $1,000, which is the type of bond you can get from the United States government, they would pay me roughly $42.13 a year for the next 10 years, 4.2127%. So if I give $1,000 to the United States government today, they pay me $42.13 every year for 10 years. And then at the end of those 10 years, they give me back my $1,000. Not what you call exciting investment return information, isn't it? But that is what is called the risk-free interest rate. That's the benchmark, the standard interest rate of debt borrowing. Notice, as you can see, since last December, how much the interest rates have gone up. A lot of that has to do with inflation. A lot of that has to do with the Federal Reserve raising interest rates to thwart inflation. And we'll be studying this number quite a bit in this class. That number ties to mortgages, car loans, credit cards. That's the key benchmark debt borrowing rate in the country. The next two are oil and gold, commodities, the two leading commodities. There's literally hundreds of commodities that you can invest in. But gold and oil tell us about the state of the economy that we're doing business in. Yes, we are becoming less oil dependent as we develop new sustainable resources in our economy, but oil is still a large determinant of company costs, the cost of getting resources, oil. Gold is a key investment item called a hedge. People invest in gold when they think there's nothing better to invest in. With interest rates rising these days, as you can see, gold has lost some of its value. But look for that to come back very soon as we head into maybe even uncharted financial times coming up in the next year. We'll talk more about that later. And then the last three indicators are the value of our currency in related markets, the relationship of the United States dollar to the euro, to the Chinese yuan, and to the Japanese yen. The dollar has never been stronger in the last 20 to 30 years. The American dollar is strongest. Why? Sound economic base, this might be a stretch, but it's true compared to other governments, a sound, stable government, and a military that protects most of the world. That's what keeps the United States dollar high. And in that relationship to other markets, the United States goods and services of their products sold overseas are very high because of the price of the dollar. But also the dollar goes a lot farther in many countries because of that value of that dollar. You can buy more of the goods and services in those countries of their products because of the strength of the dollar. This influences strategic decision-making in finance. The Chinese yuan, our key competitor, and how we do our business in relation to that is very important. So those are some of the basics of the markets and of the key definitions of finance that are talked about in chapters 1 and 2. That PowerPoint is in our class notes in week 1. If you'd like to go over it again, I'd take a look and maybe make a picture of those key indicators. If you're a student of business, thinking about having your own company one of these days, are an investor, those 9 indicators and tracking them over a period of time can be very helpful to you in understanding the world and the economic world that we live in. And we'll refer to those indicators many times throughout our class. So we're off and running. Next week, we do chapters 3 and 4, learning about and refreshing ourselves with financial statements and financial statement analysis. In the meantime, work on your portfolio this weekend, do your student bio, get familiar with Blackboard, and sign up to talk to me in the next week or so, where we have our little individual chat in the future. Look forward to working with you. It's been a good first week. Get back in, get engaged, and get going with this course. I know it takes us a while to get back up to speed after all these back-to-back sessions all the time, but I look forward to working with you all. And again, have a great weekend, and go Michigan, beat Michigan State. Adios.